Good morning, it's Friday, end of the week. Yesterday we were looking at gold and silver. They've been having a great run up, but we're starting to see signs that gold and silver are topping out and maybe even reversing. Let's get into it. Yesterday I talked about a strong support level in silver at around the 46.20 area. I expected the market to drop to that area. It was quite a big drop that I expected. I think we were around here when I was talking yesterday. So we did make a new high for this run up at 48.02, and then we collapsed. Hit the support level at 46.20. We overran a little bit, 45.88, well within the margin of error. We didn't even touch the 50 period moving average on the 4-hour chart. If you did jump into a long position there, you did okay. We jumped just over 100 ticks from the low. So I think it's fair to say that was a good trade opportunity. I think I said place a stop below. Was it 45.85 yesterday? Maybe it was 45.90 and maybe 45.90. We had a stop loss that would have allowed us to keep the position. Now, we are more than 100 ticks off that low, and we are about 70, 80 ticks above the buying opportunity. So the trade has worked and is still working if you happen to still have a long position. Right, what's next for today in silver? This is worrying. On the 4-hour chart, we have a huge bearish engulfing candle. We made a new high and then collapsed, taking out 14, 15 bars, something like that. Now, we are recovering very slowly from that, and we could continue to recover, but I would be enormously surprised if we can break above the high yesterday, 48.02. I don't see that happening. I would be surprised if we even retested it. If we did, I wouldn't be surprised to see another reaction like that where we collapse. So just be really careful. I think the tide might be turning in silver. I'm not talking about a significant move to the downside in silver just yet. I might be in gold, so keep watching. Silver for now has decent momentum, but I think that's going to change at the beginning of next week. That bearish engulfing candle is an early warning sign. Now let's see what happens if we retest 48.00. Which we could well do. We might end up getting a small double top. If we close the week above 48.00, I'm going to be happy. The bulls are going to be happy. It looks like we can then continue the bull trend next week. But I think these are early warning signs that we're running out of steam. Okay, I've said enough. Certainly, if we break below yesterday's low at 45.87, that's going to be more negative. We do have some decent support around 45.25. The bulls will be looking for bargains if the market starts to decline. They will be looking to jump in at support levels because we have been in such a sustained bull run. That is not going to change suddenly, even if we do have a downside correction. I'm looking for signs that we will start a downside correction. As I said earlier, that's just an early warning. It doesn't mean we're going to get it, but I've got my eyes peeled. Now, something that could develop, and that's worth watching today, is a head and shoulders pattern. This is the neckline. It's only a very small head and shoulders pattern. It only dates back to end of September. If we get this shoulder, left shoulder, we've got the head. If we get a right shoulder, if we fail to test yesterday's high and then turn lower and then break the neckline, which is going to be somewhere around 45.90, then we've got the makings of a short-term bear signal, a reversal pattern. But even that probably wouldn't take us any lower than 43.70, and I would definitely be looking to jump in there. I hope I'm not confusing you. I'm going into a lot of detail. I'm not trying to predict what will happen. I'm trying to give you potential outcomes based on what I'm seeing. Just to recap, we should have support around the 46.20, 46.10 area. A break below 45.80 could be a short-term sell signal. If we don't get an awful lot higher today, then around 47.20, 47.30, that could complete the right shoulder. We need to break above 48.00 and close above there for another buy signal. If we test 48.00 and then dip again, that might be a small double top pattern, but it would be very small, so it wouldn't be that significant. I think I've probably given you a ton of detail if you're trading silver today, and I hope that's helpful. Let's have a look at gold. Gold in a clear bull trend, no question about that. We've been rising, and even this week we have hit new highs. There we go. We hit a new all-time high for 38.95. And we retested that yesterday. We got to 38.96 and change. So we even hit a new all-time high yesterday. So there's no question that gold is in a bull trend, and we've hit 2 new all-time highs this week. So why on earth am I worried about gold? We had a bearish engulfing candle here on the 4-hour chart. I think these short-term candles are indicating that the market's running out of steam now. We've had a super run over the last few weeks. Once we broke above 3,400, here it was, 3,400, that was my buy signal. because we broke out of a 3-month triangle consolidation pattern. We had a great run up, and I think that now we're running out of steam. It might be that as we close in on 4,000, it's such a big psychological number. Maybe some investors, traders are taking some money off the table as we approach 4,000, being a little bit cautious. These are quite significant down moves. You can see the engulfing candles on the 4-hour chart, but when you look at the 1-hour chart, you kind of think, okay, hang on, these are more significant down moves, aren't they? It emphasizes how quickly the markets are tanking when they hit these new all-time highs. So someone is coming in there and saying, right, I want to offload gold quickly. They're not drip feeding their sell orders into the market. They are whacking them. I don't imagine this is a short seller coming in and saying, I want to try and whack gold. That would be pretty stupid when gold is in such a strong bull trend. So I don't know. I'm thinking someone is offloading gold quickly. Right, now this is key. Again, like silver, we have a potential head and shoulders pattern, but this is bigger, more serious. Left shoulder, head, and look, the head is a double top. This is something I've seen a lot over the last 20, 25 years. When you get a double top on the head of the head and shoulders, it's more significant. Now, it is a lower high, but it's not significantly higher than the previous low. The double top is a negative, and now we've peaked lower than the all-time high. Okay, we don't know for sure it's a peak. We could get through that today, so watch that. But I'm starting to think this could be the right shoulder to head and shoulders, and it looks a little bit more likely than silver. The 50-hour moving average is worth paying attention to, and I'll just show you on the chart here. Look, it can act really nicely as support and resistance. It did a decent job as resistance here, and then decent job of support there. Yes, we overran a bit. We didn't here. Resistance here. The 50 is definitely working as a level, as an indicator. Now, if we continue to hold below the 50-hour moving average, we have the makings of a head and shoulders pattern. That's not completed, and we don't have the sell signal until we break the neckline. And the neckline is around 38.30, 38.25. If we have a sustained break below there, I'm going to be looking at a potential sell signal. And that's a big call. So talk about a sell signal in such a strong bull trend is a big call, but you can't ignore the pattern. So watch for that. We would have to break above 3,900 and close above there this week for me to feel bullish again. But even if we drop, and I'm inclined to think we are going to get a downside correction, we'll get swift moves like this and we will get bounces. The gold buyers are not just going to put their hands up and say, okay, forget it, we're done, we're not buying gold. This is a longer term bull trend, and they will be looking for bargains, as indeed I said they will be looking for bargains in silver. Now I've cleaned the chart up a little bit and I put some Fibonacci levels on there so you can see where we could get to if we break the neckline. We could get to 37.60 in gold. So we could drop another 60 odd points. I'm going to go back to the 4-hour chart. I just want to see the moving averages on the 4-hour chart. Let's have a look. There we go. A little bit clearer actually, isn't it, on the 4-hour chart? So I've got another trend line. I'm going to redraw that. That's not quite as accurate as I need it to be. I like to be absolutely spot on. There we go. So trend line support around 38.35, 38.30 on the 4-hour chart. A break below 38.30 would be the completion of the head and shoulders pattern. I've said that earlier, 38.30, 38.25. But now I look at it, if we break below 38.35, what's the low of that candle? 38.37. We break below 38.35, that's going to be a negative for today, and going to lead to a test of that neckline, the neckline to the head and shoulders pattern. Watch that, really important area. 50 period moving average 38.06, going to be a little bit higher by the time we break that. So that would also be important if we break below there. And I see 37.70, 37.60 as your ultimate downside target. By the time we get there, which would probably be at the beginning of next week, by the time we get there, 5th of October, that would then be a good support level around 37.60, because we'd have the trend line just coming up to meet that. We'd have the 100 period moving average on the 4-hour chart coming up to 37.60. I'm just trying to give you a slightly longer term perspective into next week as to what could happen, what levels could be hit, where I would be willing to buy, where we would probably need to consider a short position if we broke support. Bearing in mind this double top around the all-time high of 38.95, 38.96, we would need to see a weekly close above 38.97 to get rid of all this negativity and put bulls back in the driving seat. I'm going to finish up with the point that we're getting these early warning signs in gold as well. And for me, they just feel a bit more significant than they do in silver. Let me show you. Here we go. These engulfing candles here. This one was a bit of an early warning. Then we got the low test and we took off, hit a new all-time high. So I wasn't too concerned about it. But then we got a real big pullback here. And this is another major bearish engulfing candle. Took out so much price action, similar to the one we saw in silver. And I just think these big red candles are a warning. We're running out of steam. We are overbought. We need a correction. We're getting close to 4,000. Look at us on the daily chart. Look how overbought we have been for a significant period of time in gold. Maybe it's about time we crack. And again, watch that slow stochastic break below 80 could be an indication that we've got some more downside. Yeah, we've got some more downside. If we were to break the neckline at 38.2520 and see the slow stochastic break below 80, could be an indication that we're going to build some momentum to the downside. We are reaching very important levels in gold and silver. We're seeing very important candle formations and patterns that could change things dramatically. Even on the daily chart, Wednesday, the high test and the small body candle, a doji, and then yesterday a doji, high test, low test, small red body. It's showing, if nothing else, not that the market's going to collapse, but on the daily chart, it's definitely showing that the market's coming into balance. It definitely indicates that there could be some significant profit taking at this area. Right, I hope that hasn't confused you. There's a lot of detail to go through. You might want to watch this video 2 or 3 times to absorb what I'm saying. If you're trading gold and silver today, good luck. Have a great weekend. Do join me for Monday and I'll give you an update on the situation and the outlook and just see if it's a bit clearer whether we are going to get more of a significant downside correction to gold and silver.